The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the Tuesday, June the 18th edition. Here Monday through Friday, 11 o'clock until noon Eastern Time. Today, of course, being Tuesday. Options Hour. I believe it'll be Victor Jones. I think it'll be Victor Jones. Usually, whoever does the option hours, he's our specialist. If you really want to know about options, just the different methodologies, the different ways of treating options, just fabulous show. So highly advise that that's something you listen to. Daryl Martin comes on. Let's see, who got Daryl, David White, and then we got Andy Hecht, and then we've got Tom O'Brien, 4 o'clock till 6, wrapping up the day's events and looking ahead. Just really great technicians all the way around. Let's go straight to the market. We've got the Dow up 95 at 50,275. We've got the S&P up 8 at 1647, lagging somewhat. A little bit. And the S&P is up 22 at 3474. That's the comp index. I'm sorry. Now, gold is down 21 at 1361. And I'm going to talk about that. I'll talk about it right now. I had spoken about the GLD. I had an email from a subscriber saying, that we had a buy on the equivalent of the GLD. And what I said is a buy only because the technicals were in place, and I have a technique that I've developed over many, many years. Just it only happens, it's infrequent. When I say infrequent, up to maybe once every couple of years, in fact, in certain instances. What I look for is a low bar climax reversal. And if you look at the GLD, back on the 16th, no, it was the 15th of April at 130.51. On that day, as it was making it, it followed up the next day. I said, if tomorrow there's a higher low than this, then I'm anticipating that at least for 28 bars, this is not a price move, it's a percentage move, at least for 28 bars, but it could be 38 bars. I've even seen it go for 52 bars before it comes back and retests or breaks that left side low. So this is just a great way of saying there's a time and price consolidation. No great shades. I didn't think it would break out. I thought that the second arch would be a little higher than it was. In fact, it was a very failed arch formation. I'll call the H formation. I drew it in fact, I don't know where it's gone. It's probably in another chart. It was an H formation that I said could very well turn into an M formation. I didn't expect that the M would be the right side of the arch would be so low, and then you can expect that it could pull back. Had a question in the den. Basil, how did you ever observe 28 bars, 38 bars, and 52 bars? Question by Z. Well, the answer to that is it's cumulative. And sometimes numbers just stick in my mind. If I had to go back and find out why and all that, all it would do is actually confirm those numbers. So I tend not to do that, but my experience has been with this particular technique, because I don't use the technique until there's at least 3 to 6 months of actual testing or going back, and usually it's real time, or positions I take specially tested. But in this particular instance, I felt very comfortable suggesting that we would see that first the 28 and then probably the 38, and that there was even a chance that it could go to the 52 session. But I also said I've seen it occur up to 38 in the weekly time frame, but this does not apply to monthly charts at all. So it's for anything below weekly, but it's preferable to use it on a daily basis. That is where you get a climactic volume spike low. All right? It's a spike high in the volume and a spike low, gap down usually in the price. So where is the GLD right now? At 131.71, about to test 130.85. The left side low bar of significance, because that was the real test on the 17th of May at 131.02, not 03. I call it 02. And, no, sorry, I haven't written that correctly. It's 131.02, 130.0, I wrote that in. 130.85, I didn't put a date, so I had to just check it out. That 130.85 level will be next. If that's taken out, I suspect that the low of 130.51 will be taken out. Where are we now? 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45. Hey, I would say that this has been a pretty good example, and it's probably going to go down into my textbooks of chart formations as one for as a keeper. So why have I been negative on gold, thinking that was a trade more than anything else? Because that Roman candle of of April, with a low of 130.51, a high of 154.93, Chapman wave Roman candle, another technique that I developed, says that if you go into the body of the wick of that candle, so not the body, the wick, halfway into the wick, there's a real good chance you're going to test the low. If you successfully test the low, you can bounce, but you have no choice but to go right back into the body of the candle, test a major moving average. In this case, 147.75 would be the moving average to test, or you're going to break below the left side low, which would be 130.51. If that happens, the next level of support is 139 is the high of the candle of the of January of 2011. 127.80 is the low. I don't want to go that far just yet, other than say if it breaks, you will probably go low. Now, what's really interesting is on my XAU chart, there is a much weaker pattern. In fact, the low was taken out on the left side. That's why it made me a little skeptical about the rally. That the 98.42 low of the 17th of April was taken out at 97.10. So, want you to go through that just to be very clear. And I'm watching this M formation. I'm also expecting an M formation. Now, this could be completely wrong. In the Dow. And I've drawn it in. So far, this is leg B, and that is a positive. But we'll see. It's not the close. We'll see what the close is like today. So let me just finish up. So I went through the gold. Gold's down 20 at 30.62. Silver's down 23 at 21.52. Platinum is down 95 cents, 14.33, and high-grade copper is at 3.14, down 4.90. Man, I tell you that high-grade copper is not just in its trading range, it's stuck. Crude oil is up 17 cents, 97.95. Bonds are down 8.30 seconds at 1.39 and 11.30 seconds, and you've got the dollar still continuing low. What did I say the dollar target was? 80.27. Let me just see the DXY. The low bar that it should be tested is, that's the daily, 80.50. No, that wasn't the level. 80.26 is the 200 period exponential moving average in the weekly chart. We'll see if that happens. And the EUR/USD, and now we're going to go to calls. USA leg F/B on the upside, huge move, acting beautifully. The weekly chart is making that cup formation. I have to tell you, 1.33 is the support in the 9-period exponential moving average. EUR/USD currency pair doing very well. Let's go to our first caller. We got we got Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Basil. Good morning. I got one question and another question when you get a chance later. The first question is about Lennar. Remember we talked about buying those 38 calls for July? I bought those, and yesterday on the ramp up, I took my principal off, so now I got it around. My question is, do you see this going higher, or that was just a deck bounce? And my second question is about Google. All the analysts right now, most of the analysts, they're upping their estimates to $1,000. Do you really think Google is going to make $1,000 this time?
At this point, let's do one thing at a time. Lennar, I think you have traded Lennar beautifully here. Why? Because my monthly chart says that it should be coming down before it goes to another all-time high. It should consolidate. My weekly chart says, you remember I said there's just a chance that the consolidation, at least for now, might have been completed because the 40.19 was the 9-period exponential moving average in the weekly chart, but the technicals were still very, very weak. Well, I'm looking at this and I'm saying if I put this together, and I did this the other day with the HGX, the Philadelphia Housing Sector Index, that's made a peak E in the weekly, a potential peak D in the monthly, based on the Chapman wave methodology. Most importantly is that this bounce that's occurring right now is holding the 9-period exponential moving average. In fact, Lennar could be the poster child of the HGX index. Now, that's taken a while to get there, but it is, in fact, it's even a superior chart to, it's about the same. No, I'd call it a slightly superior chart to Toll Brothers, which is also one of the leading home builders in that sector. So now let's go to Lennar. I think what you did is perfect. Now, this just a question. And the question I have is the stochastics at 37% in the daily chart. The weekly chart, let me just get to it. I'm sorry, the 120-minute chart has 40.19 as a potential target to the upside. It's peak A, B, C. Just down D. You took that off perfectly. Now, you've got free shares. What I'm going to recommend is this. I will not know until probably tomorrow afternoon or Thursday morning whether there's a chance for Lennar to get to the candle of the 29th of May. 41.78 is the high there. That, to me, if it can go, let me put it simply, if Lennar can climb above 40.80-ish, around about 80-ish, that's going to be very positive because it's saying, hey, not only is this a high-level consolidation in the weekly chart, but all of a sudden, the monthly chart, MACD, is going to see an improvement in the fast-moving average. So I'm not going to recommend that you add to this position because you've got a great profit. What I'm going to say is let's just keep that position in mind, because if it breaks above 39.97, the high of yesterday, the free shares you have, the free options you're going to have are going to be doing fabulously. The MACD is going to improve. And the stochastic, if it doesn't get to 39 or 40%, but instead just sticks around here, I'm going to suggest that this is just an arch formation that's going to come back and retest. That's my thinking right now. This is going to come back and retest the 38.94 is where it's at. It's going to test the 37 to 36 area over the coming 5 to 7 sessions. I'm going to be wrong if it breaks above 40.80. But I think you've got a fantastic trade. You've got free shares. Give it a day. Let's see how it happens, and I'll explain why. If it closes nicely above 39.97 and then has a little bit of a pullback and the market is still holding very well, the general market, you might be able to add another one or two options, call options, for a quick trade towards that 41.80 area. But I like what you've done. I think that's good. Real quickly, because we've got people lined up calling, on the Google trade, this is leg B. Now, this is a far superior pattern. I like Google. I think Google has a chance to get to, it's at 897 to 905 to 908, and that's going to be the real test. But so far, it's acting pretty well. Hope that helps you.
It does, Basil. I appreciate that, Basil. Thank you.
Thank you very much. Good trade. We'll be back with Mark and John.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. Basil Chapman, Dow's up 93, S&P's up 782. It's funny, yesterday at this time, we had that huge spike in the Dow, and then I said, I think we might have made some kind of a top. I didn't expect that it would pull back over 100 points and then try to get back 100 points. Yeah, it was up 180 and dropped to plus 55 in the Dow, then ran back and closed just over 100. And today, what we're looking at is there's a chance that the same kind of thing is happening. I don't know, but there's just a chance because I'm going to watch this real closely. Let's go to Mark in Denver. Hi, Mark. How are you?
Good. How are you? Hello?
I'm very well, thank you.
Good.
You'd like to look at?
Tell me a couple. Well, I want to look at the SOX, SOXX, wondering what you think that means for the market. And we've got a round number high so far, and I'm trying to figure out what the wave count is.
I spent so much time on the SMHs. Folks, the SOX index, SOXS, is in fact a trading vehicle. It is the iShares Philadelphia SOX Semiconductor. I believe it's 1-to-1, right?
Yes.
Yes. So this is another.
Okay. I was going to look at the SOXS if you think it's.
I've got different wave counts, so I've got them both.
Okay.
What I'm looking at is in the daily, because let me just show this. The SMH is the root. The SMH is the core to the semiconductor index, and it made a low on the April the 5th at 33.53. I better put that in, otherwise I'd have to keep typing it. 4, 5. Now look what's happening. It goes peak A, B, C, D, EF, wow, that's great. Gives a nice sell signal, MACD, stochastic, everything turns around. Then it has, this is very unusual. Why? Because if there wasn't a left side previous high, let me just check this out. No. This just goes back way far back. This was a recovery high after a really extended time period, that, in fact, took it to a high that was very close to the 2003 high in the semiconductor index, which was, in fact, now I've got it. Okay, I had to take it all the way back. Back in June of 2000, the semiconductor index, SMHs, that's the market vector semiconductor ETF, hit a high of 100.20. Subsequent to that, it plummeted to about 12.95 back in 2008. I remember the 2008 because it made its low, and that was earlier than the indices. Now what happens is it goes peak A, B, C, D, E, F, and then an alternate wave count, but I had to cancel that. I've got this absolutely in the weekly chart as leg C. This is already a very bullish sign. Dow's actually now up 111. So the market vector semiconductor index was off its 2004 January high of 42.53. And the high so far today is this month is 39.28. It's just under 3 points off a major high in the monthly chart. The weekly chart is breaking out, and that breakout is, it went to a peak E with a long-legged doji. That long-legged doji says that it should come back and test the body of the candle between 38.50 and 38.31 at some point. Well, it pulls back to 37.17. Right now it's trading at 38.70. So it's doing exactly that. There's a chance that it could go slightly higher above the 39.28, but the magnitude of that candle says it will be back there within a couple of weeks, maybe a little more than a couple of weeks. Now, that's very important. In the daily chart, I have this as a peak ABC minus. It's so unusual in the thousands and thousands of charts that I've done on the dailies and the weeklies and the monthlies. It's very seldom that you get a major recovery high. This is not an all-time high, but it's almost like that because it's so long ago, at a C minus, and then goes to a lower low. I have to consider this is a chance for a brand new leg A, but it has to break decisively above 39.28 for me to treat that as a very legitimate, breakout to a brand new buy signal going to buy mode. So now let me go to the SOXX, because that's the one that you asked about. That has a slightly different count. That, in fact, could be in leg C right now, because it legitimately made a peak D with a down arrow on the 22nd of May, pulls back for one session, goes to a higher high, and then it makes higher lows and higher highs. So this is either brand new leg A, if I want to treat that as a peak F, or it's G/C. I'm treating it right now as G/C so far because it's so strong. Now I'm going to ask you, do you have a position? What are you doing? What are you doing?
I was looking at the SOXS to go short, but I don't want to go short if you think it's breaking out here.
No. Okay, that's a great question. I'll be back, and I'll be right back straight after these messages.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, and we are back, and let me just do this. Mark, are you there?
Yes.
Okay, so this is what I'm looking at here in the semiconductor index. The breakout above the high of 38.64, that high of the 10th of June, so far this is very good action. The fact that it's gone this high tells me, so the position that you are wanting to have, which would be to short, I would say just hold off, have some patience, and I'll explain why. The pattern that I'm looking at, the question I had in the den was, for one of my Master Trader Series attendees, is why is this peak not a peak C on the 4th of June that spiked to the higher high? Mostly because a right arm extension invariably goes to a legitimate letter. It would be a D, an E, or an F. And in this particular instance, it's a C minus. I can't call it anything else because you can't go G to H. There is no H. So it's a C minus. But the fact that it went there means that it's like a target area, because the technicals were horrible all the way down. This thing should have failed, and it hasn't failed. In fact, the price is acting very well as finally the stochastic turns up and the MACD hasn't crossed positive, but it's trying to. So I'm calling this gray letter A, and I would do this because if the semiconductors start to fail, and I just found too many semiconductors that are actually acting quite well for me to think of the short side, just right at this particular moment, I'm going to say to you, hold off. What you really want to see is a failure to hold above E, which is in the weekly, 39.28. If it just pops up there, and then it closes underneath 39.28, and I don't know what the letter is going to be in the daily. We'll have to see what happens when it gets there. That says to me you could pull back into a trading range, and then what happens is that the low bar of that candle at 37.60 will be the target, but of course you got 37.81 as the 9-period moving average support. I would only be wanting to short it if I could see more than a 10% pullback, or at least you'd short it to buy puts.
I was just going to do there's a triple, which is the SOXS.
Okay. Yeah. Only under those conditions. I wouldn't do it right now. Not only that, the pattern that I didn't have a chance to speak about today, but I spoke about on yesterday, was that there's a pattern that I call the Sears Holdings pattern in the E-minis, and I said because it trades almost 24 hours a day, and it was trading from Sunday night. It's already hit the 1591.00 test low of the 6th of June by going on the 13th, that was Friday, I believe, overnight to 1591.75, and this breakout here with the stochastic actually acting quite well, not great, but quite well. If the MACD fast-moving average crosses positively, you can see this E-mini leading the way to the upside to retest the 16. I don't know about the 1680 level, but that same long-legged wick, the body of 1666, and a close of 1647, and a close of 1649. So we're real close to the body of the candle of the 28th of May. That says to me there's a chance in this particular pattern that you can go all the way back to the top of maybe 1680. I'm just not ruling it out. I never expected that would happen until I studied it closely yesterday. Now I think there is a chance that it could happen. I'm just going to say hold off shorting, but both of us will keep our eye on that semiconductor index. But you're going to need a little patience to do it, and I don't think it's worth doing unless you can see yourself getting a really sharp pullback. And the way the MACD is going to act in the SMHs over the next day or two is going to be very important. Hope that helps you.
Yeah, it does. Thank you.
Thank you. Let's go to Trevor in Denver. Hi, Trevor. How are you?
Well, how are you doing?
I'm very well, thank you.
Oh, I just wanted to say before I started, I've been listening to your show and TFNN for a couple of years now, and I think it's just fantastic, the fact that you can call in and get your points of view on whatever I'm thinking. It's just great, and I appreciate it.
It's a wonderful medium, isn't it? We are just we love doing it, all of us here at TFNN, and of course we all have different techniques, and we do the very best we can for listeners and subscribers. So you'd like to look at what?
I'd like to look at KMR, Kinder Morgan Management.
Yeah. Now, do you have a position in this?
No, not yet. I was wanting to buy. I have a long time frame, so I can wait forever for the best price. And I was just wondering what you thought maybe a low good price would be for a good dividend payer.
That's a great question. Now, Kinder Morgan was one of those that was just on a real tear to the upside for so long. It has a very bumpy ride, but it made much higher highs and much higher lows. Now it's got a leg D with a long-legged doji candle in the monthly, which says there's a chance, if certain conditions are met, we could go back to retest the body of the candle of 87.51. The high was 90.45. But there are a couple of things that need to happen. I'm going to go to the daily chart. Since you have a longer-term outlook, I'm just going to go to the daily chart for a moment to say, in the daily chart, there's we have someone in the Den who always asks the question, how do you get the left side, right side price time match? How do you know which bar to choose? And I always say sometimes it's really easy because it's the middle. You only know it's the middle as it keeps moving along, and means the price goes up in the same period to the high coming down to a low in the same number of bars to the downside, or in a cup formation going down and then back up again. And this particular instance, the Roman candle low of the 6th of March at 79.42 went all the way to that 90.45 high. Let me just type that in. 90.45 high of the 24th of April. Lo and behold, the exact price time match would have been on the 12th of June. Well, instead of going to the low of 79.42, this is, to me, this is absolutely remarkable. 79.42, the symmetry, this is magnificent. It misses it by 79.74 all that time, all the way from March until June, every single day, and then it misses hitting it exactly by 30 cents, 32 cents, and by 1 day. The next day it goes to a low of 79.50. The following day it takes it out. So 2 days and all of that. And now the 9-period exponential moving average is continuing to be resistance. So that is 81.01. So on the daily chart, I'd say today would be a great example. If it was acting really well, it was up if it was up 2 points or 1.5 points, I say, wow, it's finally turned the corner. It's in a category, I suspect, Kinder Morgan Management, KMR, trading at 80.26, that is just out of favor in this phase since April, since the April high. Now, what does that mean to you? Looking out, I'm going to suggest that you wait just a little longer. Either it's going to trade to 81.87, to 82.50 and start to make a base with the candle that we just saw of the 14th of June, which is very similar to what I call the Roman candle that was made back on the 6th of March. So if it works, that one took 1, 2, 3, 4, 5, 6, 7, 8, 9. It took 10 bars, 10 days, consecutive days, before it finally broke out. I wouldn't be surprised if this is going to take a little longer, and by later this week or next week it starts to move higher. Here's my recommendation. Because you've got a longer-term perspective, I'm going to suggest one of two things. Either you wait, and you wait for a test between 79 and 77. If it starts to form a base there, without breaking down for 10 days below the low that's made us, the moment it goes to that level, if it tries to bounce and then doesn't take that out, I think you're looking at the chance of it trying to form at least a rally that will start off as a short-term rally, but possibly because of the month, you could go to an intermediate-term rally that takes it to 85, maybe 86, 87. And then you have to check, because that ugly candle, the one that really took it down in May of this year from 86.73 down to 81, that's going to be heavy traveling to go to the upside. So I'm going to suggest, because you've got a longer-term horizon, you have some patience. There's another way that I'm going to recommend that you just think about. It's early for this stock. But if in your overall portfolio, with a stock trading at 80.20, you're able to start a very, very small position, maybe 15 shares, maybe 20 shares, it doesn't even have to be, it could be 10 shares, just to give yourself a real feel for how Kinder Morgan is acting in the market. If there's another rally in the market, and the market actually extends and goes to test its recent high, how does Kinder Morgan, does it go down because maybe it's in a sector that it's more bond related? I think that's what it looks like. Or if the market pulls back, does this thing start to rally really strongly? So if you're in the stock, you're going to get a good feel, that better than if you're just looking at it every day. At the end of the day, you will have it in your portfolio. You'll know exactly what it's doing. You'll get a much better feeling for how it's reacting and acting. And then I'm going to suggest to you, today's Tuesday, give me a call on Friday, Thursday or Friday. I'd prefer Friday. I'd like the end of the week. I'd like the weekly chart to start showing itself, whether it's holding or not holding. And then we can say, now these are the parameters that look much clearer. Because if it takes out the wick low of the 14th, it goes under 78.57, it better hold the 77s or else it's going to keep going down. I don't want you to be in a stock that intermediate term could go higher, but in the meantime, you have to sit there with a 15 to 20% decline. I don't want that. So let's look at it together. You know what I'm saying, right?
Yes, that was my fear.
Right, we've been there. So I'm going to suggest that you have a little patience. I'd rather buy strength, in fact, than catch a falling knife to the downside. So let's see if it can build some strength. And if it does that, it should have more of an intermediate-term rally, but it would have to clear $83 in that weekly chart for it to push into the intermediate term rather than just a short-term bounce. So thank you for calling. I appreciate that. Thank you so much for listening. We're all appreciative of that. I would say just hold it for a little longer on KMR and call me. Call me either Friday or if before Friday it pops to 81.60. Okay?
Sounds good. I'll talk to you on Friday then.
Great. Thanks for calling. I appreciate that, Trevor. Trevor in Denver. Now, there was a question. I'm not sure that he has a chance to ask me about it. Something about the SPY. And John wants to know about the SPY. SPY is going into leg B right now. The pattern that is unfolding is really an important pattern. Why? Because there is just a chance, I call it a gray letter B, there's a chance. I remember yesterday we had an email from Chris, and Chris wants to know, is it possible to see this as a potential falling X breakout? What is a falling X breakout? What is it? It's two trend lines that are expanding. Let me go to it right here. Falling X, it's descending cone, chapter 24 in my seed introducing the chap wave methodology. 24, there it is. Right there, page 391 or slide 391. What is it? Just as it implies, the X pattern resembles the shape of a falling X with a diagonal long handle. The blade consists of one downtrend line joining the lower highs and a deeper trend line joining the lower lows, thus forming an expanding wedge or X blade formation. And I changed the spelling of X. This is English AXE. In America, we tend to use the AX as an X. So let me, here we go. So this is the falling X pattern, and what happens is a declining cone sees a one-to-one price move above it. Now, there are a number of examples I've been doing over the past couple of weeks of this pattern, but it really has to break decisively into the 166.80 to 167.50 area. That's the SPY. I'm still of the opinion that we're going to get an H goes to an M pattern. Hey, we've got John back. Hi, John. How are you?
Basil, you are answering my question. I got cut off, so I'm calling back, and I do appreciate you going through that little exercise on the SPY or the the broad index analysis. I might ask you very specifically, I will make note, just by way of background here, Basil. I listened to you the past days, and first, the Chapman wave called beautifully the danger or the warning signs of a correction likely when the daily went into leg E and the weekly went into leg E up in there at that May 26th high.
Right.
Now we've come down, and as you rightly point out, last Thursday, the E-minis, which trade 23.7, in fact made a secondary low test, making a higher low, which begs the question, are we still in a consolidation, or is the consolidation done? And my question, very specifically, your analysis of the Chapman wave on either the 10-minute or 30-minute chart, do they tell you anything?
Okay, we've got a break coming up, and I've got a short-term one, and I'll talk about it in a moment. We are back with John in Philly, and we are looking at the SPY, which is trading at SPY is trading at whatever it's trading at. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's up 112, S&P's up 10, lagging a little bit. Dow's up 0.74, S&P's up 0.62. We're on with John, but real quickly, I just wanted to mention thank you to, I can't find where the email is now. I always get these emails from folks who listen to me, and they mention different techniques that I'm talking about. There were 3 things that we want. One is, thank you for the information about the Mile High building. I'll talk about it tomorrow. The other one was at least 2 to 3 people over the last couple of days said, thank you for the Chapman Wave methodology. It's just helped us so much. I really appreciate that. And now we're on with John. And John, this is the question that I have right now for the SPY. Let's exclude for the moment the S&P. The SPY 120-minute, I'm calling this leg C up, which says you could still get to a leg D, and that's going to be important because the stochastics at 85 and the MACD is still good. In the 30-minute chart, I've got this as the same kind of pattern that I'd seen before, a sudden spike, and I'm calling this leg E. It could turn out to be something else, and that will correspond to a pullback maybe leg F as the 120 can go to leg D. But it is all in the range that is this is really strong resistance, which is what I'm saying is that if it breaks into if the SPY, which is trading at 165.46, actually breaks into the 160, I'll tell you right now, 166.60s, all of a sudden that MACD fast moving average is going to turn positive. The stochastic will go from 49% probably to about 68%. It won't get to 80%, but it's going to say, okay, now there's a chance for a double top to try to test 169.07. Not far away, but far enough away over the next session between right now and tomorrow this time, because the Fed's coming out with statements, etc. So I just want, what would fail? That's really my question. Failing would be the stochastic stays in this only 49-50% area and actually goes lower as the fast-moving average deflects back, and the stochastic, the 9-period moving average of 164.07, the price at the end of the day or by tomorrow at this time, if the SPY is underneath the doji candle close of 164.44, that's a whole point away. That would be like giving back all the gains of today plus a little more. At this point, there's optimism. Now, I must tell you, if you don't mind me just going on, because this is not the SPY, this is to do with the Dow. My Dow Quartet, GE is testing, it's at 2404. It's trying to test 24.13, the recent high. That's going to be very important because 1 penny above starts a pattern in the weekly that says F/B, and I'm going to have to give it preference to say B. And the weekly chart, the monthly chart leg D is moving nicely. IBM is lagging. It's acting well today, but it's lagging. It's a stuck. But Triple M is doing fabulously. This is at an all-time high. I'm not going to fight a market that with Triple M at all-time highs by over-anticipating, by getting too aggressive on the short side. I'm going to be short something, but not too aggressive. And the other thing is UTX, my pilot light indicator stock, is acting well, but not great. It looks to me like it could fail any day now and start to go into a trading range. So I hope I covered the aspects that I'm looking at that I think are important right now. Oh, one other thing, if you don't mind, is the VIX index. The VIX index yesterday should go much higher. Today it's holding at 16.72. That and bonds holding kind of okay are telling me we are just about to get to some serious resistance. That's really what I wanted to say. Hey, I hope I helped you, John.
Thanks very much. Very thorough. Bye now.
Thank you very much. Folks, stay tuned. You've got Think or Swim. This is the Options Hour, sponsored by Think or Swim. Great show. I'll be back with Tom this afternoon. So otherwise, I'll see you tomorrow morning. Thanks for being here. And don't forget, my opening call is the service that you might want to check out.